We've got Jayesh Mehta, who's the country treasurer of Bank of America Merrill Lynch, joining in on the show. Jayesh, if you could just walk us through what you are likely to see for the yield on the 10-year bond and the kind of levels that you're penciling in.
I think 10-year bond, frankly, it depends on when the initial calendar came. Market was really psyched and scared because the market has been used to OMOs. Though RBI has not been doing OMOs, RBI has been on a regular basis doing open market purchase, not through the auction route, but they have been doing it on the market. So that is kind of giving stability. So from that perspective, yes, the initial view was that it will touch 9, but as long as it gets supported, and we are almost at a 0.5% of the price cut, right? So with that kind of thing, we don't see it really going up dramatically. But yes, the supply factor remains, which is a worry, and therefore we still look at it maybe at 850, 890 range. That's the range which we look at. But definitely we are not looking at it going below 850 very soon.
Right, but Jayesh, when the rate cut happened, Tuesday before last, there was this whole expectation that you will see the 10-year oscillate between a range of 8.25 to 8.4. Today we're sitting at above 8.6. What do you believe it's going to take for the yield to drop to the levels that traders were targeting earlier, the 8.25 to 8.4% level?
I don't know. I think our view was, even at that point of time, even when the 0.5% cut came, it was more like a relief thing, and relief really, that since it was surprise thing, but that 830 level, was not really sustainable at that point of time, because you do have huge borrowing. And as I said earlier also, it's like, when you had earlier, if you look at last 8 months, I'm talking before 31st March, against the 15,000 crore supply or something, there would be 12,000 crores or 10,000 crores OMO. So the effective market supply was just 3,000 to 4,000 crores, which has now gone up to almost like 15,000 crores. But it is now being supported by OMO. We come to know only later on. So that's the flexibility. In fact, RBI has done a smart thing, because earlier, it was an OMO which was on a calendar basis. You can't change the security. You could, not really impact upon it. And this really has a better impact on the market while doing small amounts by RBI.
Sure. Also, Jayesh, most people we speak to believe that you will max see another 50 basis point cut in the repo before this financial year is out. Now, should we expect then that we will not see the 10-year yield drop below 8% in the current financial year?
No. When I'm saying, 850, 890 range is what I'm talking about is still only the first half, which is still September, right? I think once the supply factor, I think right now it's mainly the supply factor which is driving it. Once the supply factor kind of eases off, which would happen somewhere, you can say November, December onwards, I'm not expecting the yields to remain at 890 or 880 or anything. I'm definitely looking at sub 8.5, maybe 8.25, or maybe 8. We don't know, but that's definite, right? Because I think it's right now, it's mainly because of the supply factor which is really, really dragging the yield up.